You are watching the charts, and all you see is red. XRP is hovering right around $218, and for some of you, it feels like the walls are closing in. The noise on social media is becoming a deafening roar. We are below the $220 support, they warn. The breakout was a trap, they scream. You see people posting about selling. You see the fear index spiking. So maybe, just maybe, you've started to question your own conviction. But let me ask you a question. Since when did the architects of a new global financial system consult with retail traders on Twitter? While the crowd is staring at the 24-hour candles paralyzed by a 2-cent drop, the smart money is staring at a much more dangerous number. So they are looking at supply. It is January 10th, 2026, and we have officially entered a market where opinion has no value. We are now governed by pure mathematics. By the time this video goes live, that $2.18 level might already be a memory. Because when you zoom out to the weekly chart, the structure isn't just bullish, it is screaming. It is the silence before the most violent repricing in history. I am the quiet analyst BHW. Today we pull back the curtain on the 4.8 billion XRP Vanishing Act. So we analyze why Senator Tim Scott's meeting next Thursday is the kill switch for the old financial era. And most importantly, I will tell you why the rich list is the cleverest psychological distraction ever created to keep you from holding your position. This isn't about hope. This is about liquidity. Stay sharp. Stay calm. Let's dive into the data. Look at your screen. Look at the noise. Today, January 9th, 2026. The retail crowd is whispering in fear. We are under $220, they cry. The breakout has failed, they tweet. But when I look at the one-day chart, I don't see failure. I see a stabilization phase. XRP is currently sitting around the $218 area. For weeks, $220 was our heavy resistance, the ceiling that refused to break. I say, now that we've touched it and pulled back slightly, the amateurs think the party is over. They forget how markets breathe. We are at what I call the zero-gravity zone, a make-it-or-break-it moment for the short-term mind. Either we reclaim that $2.20 C level as support, or we dip back to test the $2 psychological floor. But here is what the noise isn't telling you. If you zoom out to the one-week chart, the picture is drastically different. Even with this minor pullback, XRP is still up 18.62% over the last 7 days. Does an 18% weekly gain look like a crash to you? We are witnessing a classic bull flag formation on the macro scale. In 2017, we saw this in 2021. We saw this. The price consolidates, the weak hands exit, and the spring tightens. Bitcoin is currently hovering around $91,000. XRP is still tethered to Bitcoin's gravity for now. If Bitcoin finds its footing and moves back toward its highs, it will pull the entire market with it. But XRP is starting to develop its own internal engine. We are also waiting for the terrorists' announcement this coming Friday. The market hates uncertainty, and until those numbers are clear, we stay in this quiet accumulation range. Don't let the red candles blind you. A downtrend on the 1-hour chart is often just a discount on the 1-mon chart. Patience isn't just about waiting. It's about understanding the structure. And speaking of structure, the most important structural shift isn't happening on a chart. It's happening in Washington. While you were distracted by the 2-set drop in XRP, something historic happened in Washington, D.C. Yesterday, Senator Tim Scott, chairman of the Senate Banking Committee, officially confirmed the date, Thursday, January 15th, 2026. This is the day of the markup. For those who don't follow politics, a markup is the final stage before a bill moves to the Senate floor for a full vote. It is the moment where the Wild West era of crypto is officially executed. The bill is called the Digital Asset Market Clarity Act, or simply the Clarity Act. Its mission is simple, but its impact is nuclear. To end the decade-long regulatory turf war between the SEC and the CFTC/CT. For years, XRP was the main victim of this war. Was it a security? Was it a commodity? Next Thursday, the law will provide the answer once and for all. The Clarity Act introduces what they call the maturity test. If an asset is sufficiently decentralized, it transitions from SEC oversight to CFTC oversight. But here is the quiet detail that the mainstream media is missing. This bill doesn't just regulate trading. It aligns with the Genius Act, the stable coin law that was signed last year. It creates a unified legal framework for institutional liquidity. Think about the timing. Why is Senator Scott pushing for this vote now? Because the 2026 midterm elections are approaching and the crypto lobby has become the most powerful donor in American history. If this markup succeeds next Thursday, it sends a signal to every board of directors at every major bank. The legal risk is gone. The institutions don't wait for the bill to be signed by the president. They buy the moment the certainty is confirmed in the committee. While you are waiting for a green candle, the giants are waiting for a legislative signature. And once that signature happens, the supply you see today will become a relic of the past because the ETFs are already standing at the door with empty bags. Let's talk about the math that Chad Steingraber recently highlighted because this is where the truth lives. WisdomTree may have officially withdrawn its S1 registration for a spot XRP ETF, and the headlines try to paint it as a lack of interest. In reality, WisdomTree realized they were too late to a winner-takes-most market. By early January 2026, the first batch of XRP ETFs from Bitwise, Canary Capital, and 21 shares had already captured over $1.3 billion in cumulative inflows. The competition is becoming a bloodbath. Not because demand is low, but because the supply is evaporating. Think about the numbers Chad put forward. If we have 12 to 15 medium-sized funds, and they collectively take just 20 million XRP off the market per day, that is 100 million tokens per trading week. That is 400 million tokens per month. So by the end of 2026, that single stream of demand will remove 4.8 billion XRP from public circulation. And that is the conservative scenario. If FOMO kicks in, if Morgan Stanley or BNY Mellon decide to provision their clients with XRP, we could easily see that number jump to 8 billion or even 10 billion tokens locked away in institutional vaults. Now, look at the current exchange reserves. As of this morning, January 10, 2026, there are only an estimated 1.5 billion XRP remaining on Western centralized exchanges. Now, do you see the crisis loading? We have a demand pipeline of 4.8 billion, staring at a liquid supply of 1.5 billion. The math doesn't work. Something has to break. When institutional demand meets a liquid supply of zero, the price doesn't just rise, it gaps. These institutions aren't buying to trade. They are buying to hold as long-term collateral. Every inflow into an ETF is a one-way street for that XRP. It leaves the exchange and it never comes back. While you are worried about the $2.18 price point, the algorithms are frantically searching for liquidity that isn't there. This is why Standard Chartered set their target at $8.33. It wasn't a guess. It was the price required to provide enough liquidity for these trillions of dollars to move. But if the supply is so thin, why are you still being told you are too late? Because the rich list is a psychological weapon. Let's talk about a narrative that is pushed constantly in your feed. The XRP rich list. You've seen the posts. Only 330,000 accounts hold more than 10,000 XRP. Retail is being priced out. They make it sound like you are failing. If you don't have $22,000 sitting around to buy 10,000 tokens at today's price of $2.20. But here is the quiet truth that no one on social media wants to tell you. The rich list is a ghost. First, those 329,000 accounts do not represent 329,000 people. I know investors who hold their XRP across 20 or 30 different wallets for security, staking, and testing. One person can look like 30 different people on that list. Second, centralized exchanges hold massive amounts of XRP in single cold storage addresses. When you see a wallet with 1.8 billion XRP, that isn't one whale. That is millions of retail investors like you who haven't moved their tokens to private wallets yet. The rich list is designed to create stress. It is designed to make you feel small. They want you to think there's a magic number, specific target you must hit to be successful. There is no magic number. In early 2026, the cost of accumulation has skyrocketed. A year ago, 1,000 XRP cost you $500. Today, it costs you $2,200. Retail is not being priced out. They are being shaken out. Second, influencers are telling you to gamble on XRP ledger meme coins like Drop or Fuzzy, promising you can flip them to reach that 10,000 XRP goal. Don't fall for the trap. That isn't investing. It's a lottery ticket in a burning building. Life-changing money is not a universal figure. For some, it's clearing debt. For others, it's a down payment on a home. For the top 1%, it's generational wealth. Neither of them is wrong. The only mistake you can make is comparing your Chapter 1 to someone else's Chapter 20. The institutions want you to focus on the rich list so you don't notice the utility shift. You don't need 10,000 XRP to win in 2026. You need patience, and you need a plan. Because when XRP becomes the backbone of the global financial system, even 500 tokens will be a treasure that most of the world can no longer afford. But what happens when the chart itself starts to speak? In our final section, we look at the Peter Brandt signal and the V-shaped reality that is coming. Finally, we must look at the chart that has the entire trading world holding its breath. The legendary trader Peter Brandt recently shared a weekly XRP chart. No words, no hype, just 2 words, without comment. When a veteran like Brandt stays silent, okay, it's because the pattern is so obvious. It doesn't need an explanation. We are looking at a multi-year bull flag that has been coiling since 2018 and in early 2026. The spring is at its breaking point. The target branch chart suggests a move toward 350 as the first major threshold. But if we clear $350, $50, with the current institutional momentum, the path to 833 and beyond becomes a high-speed rail. Many people think they can time this move. They think they can sell at $2.25 and buy back at $25. End of that. They are playing a dangerous game. XRP is no longer a penny stock of crypto. It is becoming an institutional utility. In 2026, XRP doesn't move in pennies anymore. It moves in nickels, quarters, and dollars. One morning, you will wake up and the gap will be so large that those who sold for a 10% profit will be left standing at the station, watching the train disappear. The institutions want your tokens. The ETFs need your liquidity. All you have to do when the market turns red is nothing. Stay focused on the architecture. Stay focused on the 4.8 billion supply shock. The breakout is loading and it won't wait for the fearful. I want to thank you for spending this time with me today. All right, we are living through the greatest financial transition in human history. It is noisy. It is stressful. But for those who understand the mathematics, it is a once-in-a-lifetime opportunity. If you found value in this briefing, smash that like button and subscribe to join our community of thinkers. I am the Quiet Analyst BHW. Stay patient, stay positive, and as always, stay quiet. I'll see you in the next one. Peace.